Good afternoon, Options Trading Signals members. This is J.W. Jones coming at you with your weekend video analysis. Hope everyone had a safe and enjoyable weekend so far. It's enjoying a Sunday. I'm getting ready to watch a little football. I wanted to get this out before we really get started with the NFL today. I'm a big NFL fan, so I watch a lot of football on Sundays this time of year. But current time's 11:45 Eastern. On this 18th day of December 2011. We're a week away from Christmas for those that celebrate the holiday. And let's go ahead and jump into the charts here. Starting off with the S&P 500 daily chart. And we look at this, we kind of see the S&P in this wedge, kind of in the middle of nowhere. Had the pullback off of resistance up around the 1270 area. Pretty sharp pullback. Friday's action looked pretty good early on, but by the close, we lost most of the gains on the day. Ended up closing up about 4 points, but the primary point I'd like to make is that price pushed all the way up. You know, we got our back test, clearly back tested the 20 period. Then we back tested the 50 period and we failed. Doesn't mean we don't see a push higher on Monday. I'm not suggesting that we do that doesn't show up. All I'm saying is on Friday we failed. So this gives me a kind of a bearish undertone, at least for now. Wouldn't be shocked though to see higher prices. I mean, we're going into the holiday. The next 2 weeks are going to be super light volume. The bulls are clearly going to have some of the advantage just because of the seasonality, and light volume typically leads to higher prices. However, in a light volume type trading environment, the big money can move prices, so anything could happen. For those of you that feel like they have to be trading this with equities, I would keep positions a third of your normal size, because the fact that there's going to be super low volume traditionally, you could get whipsawed pretty easily. Now this year may be different because we have a lot going on, and the volume may be stronger than normal. I mean, who knows? But we're coming into this situation with a lot of people looking, maybe even hoping for a Santa Claus rally. Portfolio managers are going to be trying to buoy their performance. There's going to be some chasing that goes on. Usually, if they chase, the best way to know where is the hyper beta. So we look at stocks like Apple and Amazon, Google, Baidu, things of that nature. They'll be chasing those stocks for performance, and clearly there's some performance anxiety among fund managers out there, which can propel prices at the end of the year. So that's where we're at. But all I'm suggesting here is I think caution needs to be exercised. I think smaller position sizes make sense. If we do start to roll over, we're going to have this support line that comes into play. Below that, I'm just going to throw this line in here real quick. There's going to be some support down here as well. So we have like this support zone, but I think if price pushes through this level, we will see the lows tested around the 1180 area. 1160. And from 1160, if that level breaks, I think we probably get a test of the lows around 1076. A rollover from here is not going to bode well. If we start to really sell off, maybe not this week, but the last week of December, we flip on the screens in 2012, and the market is selling off, and we breach those levels. We're going to see some serious selling pressure set in. Particularly, I think if this level here has to hold for the bulls. If this level breaks, I think the bears are going to have the bulls on the ropes. So that's kind of where I'm coming from, at least for now. Overhead, there's significant resistance. We've got the 200 period. Well, we have to push through the 50 first, but above that, we've got the 200 period moving average. And then we have these two descending trend lines, which are going to offer major resistance around the 1260 area. So we have a ton of resistance, quite a bit of support, and prices trading in between. It's going to take a major catalyst. I suspect Europe and/or some kind of other major announcement out of the Fed, such as QE3, to actually move this market out of this triangle. I think it's going to stay in this triangle. We may see it stay in the wedge or the triangle pattern all the way through the holidays and set up 2011 for the break. Anything could happen. We'll see what happens this week. The VIX volatility is starting to really decline. I just threw these two lines up here. We're kind of in a giant trading range. If we break below the 2250 area, we're going to see volatility really start to contract and really pull back. Not, I wouldn't be shocked to see that happen simply because of the seasonality. However, I would point out that there have been several days recently where the VIX was down and stocks were down as well. So the VIX isn't holding near as much weight right now. Part of that was probably because of the triple witching scenario. Some of it has to do with the seasonality. So that's the reality on the VIX. There's not a lot to talk about there. IWM, we get to the usual suspects. A lot of these charts start looking the same. So we have a lot of we just have a lot of similarities in the price structure and a lot of these usual suspects, which is not always uncommon. So we have a giant triangle, just like what we saw in the S&P. A little bit clearer triangle. We got major support here, major resistance overhead. Here's the 200 period. And price action on Friday was just ugly for IWM. We zoom in a little bit. Pretty big range day with a major pullback. Doesn't mean we can't push higher, but I would point out the fact that it certainly didn't close near the highs. We got major resistance overhead, and if we push through that, we're going to see the 200 period come into play, and then the recent pivot high around 77-ish. So with that said, that's where I see the IWM. If we go through the usual suspects, we're going to see a lot of similarities. They're very similar to what we're seeing in the S&P. A lot of correlation right now. A little bit different with IYT, the transports, but still similar type price action. We got this wedge. Here's your resistance area right in here. Major resistance at 200 periods there. Big support down here. So we have this similar type of price action. It's not exact, but it's similar. There's quite a bit of correlation going on. So we're just going to have to wait and see how this thing plays out and which direction prices ultimately push through. This is a really good environment, in my opinion, to be looking to do a long-term butterfly just because of the seasonality. Also the fact that volatility may continue to decline, which can impact the price there. We're looking to do that with SPY on Monday and getting some long-term, very wide butterflies out there for some rapid time decay over a period of time. Not looking to make tons of money on those. I usually focus on somewhere in the 10 to 20% range. They have a pretty high probability of success. We can adjust them, widen out the spread if we need to. And I just think it's a good environment to be looking to do that. We'll probably take a little bit smaller size than normal just because the volatility and the fact that not the volatility, but the fact that we have such light volume. I don't want to get on the wrong side of the market. So that's kind of why I'm using that strategy. And the IBM trade really worked out nicely. 17% return based on maximum risk per spread. That trade worked nicely. There's going to be more of those from time to time. I'm going to try to do one of those types of trades once a week, a little quick hitter. They really can juice up the performance, and I'm really committed for 2012 to really hone in on our trades. I want to produce more trades for members, and I want the service to be a asset to the membership, not just in terms of information or education, but also in terms of the trading. I'm pretty happy with this year. I mean, we're clearly net positive for the year on trades, but for anyone who took every single trade, the difference there, though, primarily being that I want more trades next year. I want to be in the 6 to 8 trades per month range, and get more methodical in what we're doing, so that members can really focus on the spreads and learn the spreads. That's what I'm really focused on for 2012. Now that the service has been around a while, I've kind of got it honed in the way that I like it, and the way I don't get a lot of catch much information from members too much as far as any complaints. So I'm pretty sure this is the right setup to what we've been doing. So I'm really excited about the 2012 and trying to ramp up some of our trading. Let's take a look at EEM, emerging markets, giant triangle. This one's obvious. We're down at the bottom of the range. Price action was pretty weak. If we break down, I think it's a signal. If EEM breaks to the downside here, I think it could be a leading indicator that the rest of the market's going to roll over. I'm going to be watching it pretty closely this week and next week. Bounce, we've got resistance overhead, not too far overhead. So we could see one more kiss of the of this area right in here. Let me zoom in. This area right here, this descending trend line, we could see a test of that area. It might break and push higher. If we see a test and fail, we have a pretty high likelihood of breaking down to the downside. But we can't forget XLF. Almost skipped our favorite XLF. Notice how all these charts, the usual suspects, have this very similar correlation. They got giant triangles, or they've got these resistance and support zones. Well, the price action of XLF on Friday was absolutely horrible. We actually came up, kind of got a test, didn't even really get to the 50 period, rolled back over, closed below the 20 period, and showed relative weakness against the S&P. This type of price action is not what we're looking for the bulls. We certainly want to see the financials participate. They're rolling over here. I don't really like the price action I'm seeing. It's getting a little bit concerning. What will be interesting, and I want to point this out, if XLF rolls over and hits this support level and starts to bounce and we get a nice little pop, it's going to look like we get a double bottom with a higher bottom, which is going to probably cause bulls to step in and could result in a breakout over this level. So don't count, just because we roll over doesn't mean financials are dead. We may roll over, test this, bounce, and then we put in the higher low, double bottom, and off to the races we may be. So keep that on your radar. Dollar index obviously had a big breakout. I've got my two areas of support that are really short term that need to hold. The dollar's going to keep going higher. We can bounce off this level, this little pivot high, and bounce off here and come back up and test resistance, or we could come all the way down and test this pivot high and then bounce. And if we break below this level here on 79.90, I think the dollar could be in a full-scale correction back to maybe the 50 period or even lower. So I'm going to be very careful with the way I'm analyzing the dollar. It should give us some clues as to what's going to happen next, especially if we start to see some support set in Monday or Tuesday and a strong bounce plays out later in the week. It's going to put a lot of pressure on equities and risk assets, and we could see the price action really take off. A lot of people don't expect the dollar to do much here, and we'll just have to wait and see. Gold futures, pretty strong snapback on Friday. Really popped up nicely, up about $25 an ounce. But notice that we're below the 200 period. We've got this descending trend line. We broke out of the triangle. Now we got this ascending trend line that's right at the 200 period. There's a ton of resistance right here. You've also got some pivot lows coming into play, so there's a lot of selling pressure here. I wouldn't be shocked to see a back test of the 200 period moving average. What happens, the yellow line here, what happens from there is going to be very telling. If we push back into this range, we have a chance to come all the way back up and break out above this descending trend line here. But if we come up, hit the 200 period and roll over, a test of this level here around that corresponds to those recent lows, right around the 1500 range. It's actually a little more than that, around 1530. That level breaks, then we may see even as low as 1470, 1475. That's kind of where the gold situation is. I mean, we're probably going to get a little bit of buying pressure coming back up to see a back test, but after that back test, where we go from there is going to be very, very important. Silver, similar situation with silver, had this little channel we talked about for a while, finally broke down out of it, then we bounced off of this little low, and now we're coming back up probably for a back test, just like what we saw in gold. And what happens from there is going to be very, very telling. Lots of resistance overhead. So silver may or may not be out of the woods yet. I think it's going to be interesting when gold and silver both are testing those recent overhead resistance, which clearly was a major point of support prior that broke down. What happens on this back test is going to be critical for the precious metals. Take a look at oil. Oil futures got ugly towards the end of the week. Really ugly bar here. We lost, went from 100 down to about 95 dollars a barrel in the course of one day. So that was a pretty ugly trading day. But right now, we've got price kind of sitting in this range between 105-ish and maybe a little above 90, 90.50. I think there's a good chance we could roll over here all the way down and test the 90 level. We got a back test of the 50 period moving average. I won't rule out the possibility that the 200-day could get tested. What happens if the price can get back above the 200 period? I think we could see an extension higher, but if it rolls over and starts to die and we come all the way down and test 90, it's not going to bode well for oil. It's going to look pretty, it's going to certainly look like it could really get ugly. And in particular, if we lose this support at 90, we could see really sharp sell-off in oil in a short period of time. So a lot going on in the next 2 weeks. It's going to really impact markets going into 2012. I was going to take a look at the 30-year futures, but made a little typing error here. Let's see if I can straighten that out. But overall, I think we're seeing the kind of price action in a lot of these underlyings that is indicative of, the next 2 weeks are really pretty important as far as the 2012 first quarter of 2012. It's also important to note that a lot of guidance has been revised, some questionable things going on there, so we'll keep that on the radar as well. But major breakout on the 30-year treasuries, treasury futures. We had this obvious triangle that we had pointed out, had a big breakout there on Friday. If we continue higher and we don't reverse on Monday, if this thing continues higher, we're probably going to test the recent highs, and there's a chance we could break out. If we break out on the treasuries, I think it's going to be a sign that risk is coming back into the market, and the S&P could be in big trouble, especially if we break out above these highs. If we break out above these highs, I think there's major concern of either equities being in trouble or the market is already pricing in some kind of QE3. So keep 30-year treasuries on your radar, because we're getting a break, and this is a very difficult environment. There's so many things that could happen. We've got major headline risk coming out of Europe on an almost hourly basis, it seems like. So the treasuries reacting like this is important. The market is talking to us. We need to see if we get a reversal back into the range tomorrow. If we extend higher, I think it's a concern going forward and something we have to keep an eye on as traders. If we take a look at the 10-year, it's very similar price action. We have this giant triangle wedge pattern, and here's our triangle coming down. We broke through it. We've got some resistance right overhead. If we get a reversal back into this range, that'll be very bearish for treasuries. But if they push up through this resistance and tag this the recent highs and are able to push through that level, we're in blue sky territory again, and they're going to be off to the races. If we zoom this thing out on a monthly basis, going back, we're at levels that we break out above here. We're at full scale. There's nothing overhead. We're in what the blue sky territory. No resistance levels that are automatic, and we're just kind of out in no man's land, going higher if we do get a break. So this is very important to be watching. If we do break higher, it could be very concerning for equities. So with that said, I'm going to go ahead and sign off for the weekend video analysis. Hope everyone has a safe and enjoyable Sunday. I'll be in touch first thing Monday morning. Also wanted to let members know the position scoreboard has been updated to present, and overall, so far this quarter we're having a pretty good run this quarter. Obviously, the GLD trade was a bad trade, and it really hurt us, and I get that. But at this point, we're just gonna have to claw back, keep trading strong into the end of the year, and start off 2012 right on track. So with that said, I'm gonna go ahead and sign off. Take care. I'll talk to you soon.